This episode of the New Medical Nomads podcast is brought to you by Nomadicare. Now, personally, I love Nomadicare. I've used Nomadicare, and I recommend the company to all new travelers. What Nomadicare does is it takes the fear out of getting set up with a bad recruiter, which is the biggest fear that you have jumping into this journey. So they sit down, they interview recruiters, they vet them, get them on a list, and then provide them to you as a free service, as a free recruiter matchmaking service in order to get you started on your journey. Now, usually you only get 2 recruiters going through Nomadicare, but being a listener of the show, you can get 3. So this is how it's going to work. You go to nomadicare.com/Dylan. You will get set up with 3 recruiters to be on your dream team, as well as a guide to get you started on your journey.
Mr. Joseph Smith, where are you at in the world right now?
Sitting in Norfolk, Nebraska, right across the street from the high school where Johnny Carson, famous comedian, went.
Oh, really? Wow.
Yeah.
That's cool. That's cool. Hey, Nomads. Welcome to another episode of the New Medical Nomads podcast. I'm your host, Dr. Dylan Collier. Today, I am with the famous Joseph Smith of TravelTax. Joseph, your name has come off quite a bit on the show, talking to several different travelers, several different influencers. So I'm so happy to have you on the show. Can you give a little bit of your background and how you got into, being the TravelTax guy, and a little bit about your story to the listeners?
Oh, the old short version of my 53 years, right? Okay. Well, that's a common question I get. Actually, back in my undergrad, I double majored in respiratory therapy and accounting. Actually, what I did is I did RT first. They gave me the money to go across town and go to the other school, and I did accounting. And after I graduated, got married, I asked my wife, what do you want to do? I can go work for an accounting firm or we can go travel. And I was one of those guys that were raised to think that that's the last thing that my new wife would want to do. Uh-huh. And she surprised me by saying, that's pretty obvious. Let's go hit the road. Mm-hmm. So I had a willing participant in the exploit. So we did 9 cities in 3 years. And as I was traveling on my second assignment, a couple of coworkers found out I had an accounting degree. I didn't say I did tax work. And this was 1991, mind you. And I came into work and they came bearing manila folders and just gave them to me and said, please do this. I'll pay you whatever. Sort of like an open wallet there, I was like, this is different. So why was that unique? Yeah, the multi-state return like all travelers have with per diem issues. So that's sort of where it all started, and it was this hobby that I had for a couple of years. Mm-hmm. Moved out to Nebraska here back in 2001, and this hobby had become sort of a winter gig, and I decided, why don't we just do something with this? And I started writing for Healthcare Traveler magazine, which it's a print magazine that hardly exists anymore. Uh-huh. But I started writing about tax issues, and the next thing you know, I got more calls. So in 2003, we officially launched nationwide. Wow. Actually, it was 2002. And the rest is somewhat history. We broadened our scope. It's almost anybody who is a multi-state or a international cross-border client. I eventually went and got my taxation master's with an international emphasis. So we've come a long way. I remember those old days, and I remember getting my first employee thinking, wow, this is new. Now that's just a regular event. Uh-huh. But that's the journey. And I would say anybody that's starting a business probably has something similar. I hung up the stethoscope in 2008. Okay. I still enjoyed patient care. The problem is, like most travelers experience, you get all this politics, and the caring for the patient becomes less of the hassle than caring for the computer.
Right.
And I think a lot of us who travel have that same sentiment.
Yeah, I don't think you'd have much argument there.
Yeah.
I think unfortunately that's a very commonplace. And Joseph, I got to meet you first at the Travelers Conference at TravCon, and I know that you're one of the founders there that kind of started that whole gig. So you're a very busy man. What kind of led to you starting the Travelers Conference?
That was actually a byproduct of my tax symposiums I used to do.
Okay.
This is before I had kids, so I don't recommend this for anybody. In January and November, I would do this little circuit of 10 to 15 cities, and I would post on social media before Facebook, mind you, that I was going to have these little tax seminars, whatever you want to call it. They weren't big shows. They were just multiple times in which people could come in, like 3 or 4 at a time, and I would do a presentation on the tax issues. Some of these benefits counselors that you go visit, same thing. So I was doing that every year, and one day I had gotten to know a number of people number of travelers that have been doing this for many years. Okay. And the first salvo is that Phil Light and David Wetzel, I can't even pronounce it this morning, we decided to start a national advocacy association for travelers. It's now called Professional Association of Nurse Travelers. This was 2006. We met in San Francisco, got that formulated. Well, the next year, I'm back in San Francisco with Phil and Candy Thrift, who is the founder of the Gypsy Nurse, and one other person, and we were sitting around just enjoying each other's companies, and one of us had the crazy idea of starting a conference. Sure, let's do it. So we had the first one, in 2008? Okay. And 125 people showed up, and then the recession hit, and it was a meet and greet for 3 years, and then we just kept going. Yeah. And last year we got up to 1,200 travelers and 75 staffing agencies. So all it was supposed to be was a little social gathering of a couple of travelers. But it took off because what we wanted to do was give the travelers a voice, empower them with knowledge, and have them meet recruiters face to face. Yeah. Versus talking to them. So it was something that, again, we just did because we could. Yeah. And it was blessed over all these years, and I'm really proud of what it's turned into. It's not a lot of drama, and it's not turned into a political party. It is gathering the travelers, making them feel as if traveling is a specialty, and giving them a chance to really demystify this industry we work in, which is mysterious. Absolutely. Yeah.
Well, I definitely highly recommend TravCon, the Travelers Conference. I've had Phil Light on the show. We've spoken about it, and then also about Pan Travelers. So listeners, if you are looking for more information on that, you can find those in the previous episodes as well with Phil Light. But that's interesting. I didn't realize that it was kind of a continuation of your symposiums that you would do. Yep. For the tax thing. And so I've had the fortunate ability to kind of go out and have like little traveler meet and greets, kind of like what TravCon started out with. And I've met persons and we've talked, and after seeing like, your information out there, I understand the importance behind tax homes, understanding taxes, how big of a role that plays. But there are some individuals out there that kind of just, I don't want to deal with that. I'm just kind of putting it off. So one thing that I wanted to talk about today is why it's so important for travelers to be aware of these taxes, be aware of these tax laws. And I wanted to know if you had any input on that.
Well, it's, let's put it this way. If the average traveler is getting $25,000 to $30,000 a year in tax-free reimbursements. What allows them to get that tax-free? What's the qualification mechanism? The agencies are actually supposed to be doing some serious due diligence of this. This is why you get a tax home statement. This is why we've had oodles of agencies audited since 2012, because unfortunately there are those in our industry that don't care. And travelers have been caught up in this. And it's not just healthcare staffing, it's industrial staffing. But you got a tax gap there. And for every person that doesn't pay their fair share of taxes based on their income, you've got another person that's honest and ethical that's having to pay more. I really cringe when I see people say it's nobody's business what you do for your tax home, because that's just, as far as I'm concerned, you're leeching off of somebody else. But the laws are there. The agencies are supposed to enforce it. Tax-free money isn't candy. It's something that you have to qualify for. And I guess we'll probably discuss how you qualify down the road here. But it is a very important item. I mean, when the IRS is putting out millions of dollars of penalties on some agencies for non-compliance, it's a serious business.
Absolutely. That's kind of leading into my next question of, that's the why behind it. And then obviously there is a penalty associated with if you don't follow the rules. What happens with an IRS audit? What does that look like? It seems to be a very fear-mongering topic among the groups, but could you describe kind of what that process looks like?
There's multiple ways in which an audit is chosen. Sometimes, probably the more common, there's something on your tax return that just doesn't match. Or there's something on your tax return that is in excess of normal percentages. Something that's just an outline. If there's no information that would lead a casual viewer to see a cause and effect, for example, you have very little income but massive medical expenses, well, perhaps you got injured. There's patterns there that you can pick up. Then an audit might pop up, or it's other information that the IRS has at their disposal that would lead them to. And then there's just this completely random audit.
Okay.
Audits can be drain a lot of human resources in the IRS, so they're not just going to pick immaterial unless they have which leads to the other type of audit, they have an industry focus or a compliance focus on particular areas, let's say charitable deductions. They may decide one year that they're going to audit 10% of all returns that have charity. And it's to establish, it's really more like an intelligence gathering. What's really going on here? What's the pattern of receipts that people are not keeping? And then they issue new regulations. Got it. So there's many ways that can happen.
Okay.
And you're probably going to ask about state audits. States will usually let the IRS do the dirty work.
Okay. But
increasingly, with the IRS's budget being so stretched, the states in the last 6-7 years have been more aggressive doing unilateral audits. And you see that a lot in Oregon and Georgia, of all the two states. And they will look at the same patterns, they get the same information that the IRS does, or they may be more aggressive in the residency side of things, which is really where travelers trip things up, because the states routinely cross-reference professional practice licenses. If you have a nursing license and no income, say in California, California will randomly send letters asking where the tax return is. And you have to respond. If you don't, 2 years later, you're going to get a lien.
Wow.
And a lot of states do that.
Got it. So basically, states are almost holding our licenses for random. or ransom, excuse me.
You can say that.
That was probably one of the biggest pieces of information that I learned from your speak last year at TravCon. Was it's not the big bad IRS that is really the one looming over. It's more of the states.
Yeah, back in 2012, we called every state nursing board and every state tax agency and asked them, do you share information? And the consensus was, we do. If we don't, we can't. And if it's a nail technician or a nurse, we don't care. It's a license.
Yeah.
So
that's crazy. That's crazy. Oh my gosh. Okay. And there's so many licenses that go into everything too. I mean, a yoga instructor down the street, you have to have a license in order, driver's license. Like so many different licenses. It's so hard to be a part of a professional organization and not have something like that, especially in the medical field. So yeah, definitely opened my eyes to the severity of why taxes are so important, that if we're going to take advantage of the tax offerings that the government is allowing us, that we need to make sure that we're playing by those rules so that we don't incur the penalties later on. Did you want to hit on the rules of the taxes for a traveler?
Yeah, well, this will keep everybody in further suspense here. And if you ever sit through my seminars, I elaborate more on this. And TravCon, I talk nonstop in my own room. So if you want the long version, come to Vegas in 2 weeks. But a tax home, everybody keeps asking, what is it? Well, I'll tell you what it is not. It's not a permanent residence. Those are two separate concepts. And that's where most people get confused. They think, well, I have a permanent residence. That must be my tax residence. No, they're often in the same place, but they're separate things. And that's probably the reason the confusion is there, because it always winds up being the same place for most people. But a permanent residence is a legal concept. If I showed you my driver's license, my voter registration, it's pretty clear I have a legal tie to a community. And that is usually considered a domicile or a permanent residence or variation of that. A tax home, that does not establish. A tax home is a money home. So the first question, and sometimes you have to put on your ACLS algorithm hat here. A tax home first asks the question, where is this individual's main area of income? So if they have a pattern of regularly returning to the same area, not state, and producing income on an annual basis, then we are finished. That's it. That's the tax home. You can throw $1 million at a residence clear across the country. That doesn't change the fact that you work at a particular place regularly. But when you don't have a main area of income, and what are our travelers most likely to do? They're most likely they go from place to place to place to place and not repeat a place. When you don't have a main area of income, then your tax home can default to the place where you maintain your abode, dwelling, housing, or lodging. But in maintaining, the definition of that is you are incurring substantial expenses, just like your next door neighbor does, like anybody else does that keeps a home. You're incurring substantial expenses for this, and because you are temporarily away and are working at this other location that you cannot return to home from in order to get rest or sleep, then you are incurring a second set of lodging expenses. So the tax laws say, well, you don't have a main area of income, so you can get reimbursements for that lodging and your meals away from home on a tax-free basis. If it's an income-based tax home, because you have a main area of income, you're being reimbursed because you are working away from that source of income. So it's either income-based or duplicated expense-based. If you don't have one, don't have two, you're itinerant, all of it's taxable.
Mm-hmm.
And the confusion there is you can have an income-based tax home, but 95% of travelers fall under the exception to that rule because they don't have a main area of income. So that's your sort of down and dirty version of it.
Down and dirty.
There are other angles to it, but suffice to say, tax home and permanent residence, you got to define those two.
Mm-hmm. And for the listeners, Justice Smith has a great blog on this, and it's very, very well written and very easy to understand. I'm going to include those in the show notes as well. So if you're wanting more information, you can go there at newmedicalnomads.com and find them there. And yeah, that was one of the big misconceptions I had first going into this, is that a tax home was actually a building. It's not so much. A tax home is actually an area where you would earn the majority of your income. And so there are three rules for a tax home. Can you go over if somebody's only meeting one of the rules, where do they fall under? If they only meet two of the rules, what do they fall under? And then if they meet all three, what happens?
Well, you're actually referring to Revenue Ruling 73-529. It is on my blog. I have a bunch of citations there that anybody can look at. What you're referring to is actually the test of those that don't have a main place of income.
Okay.
Because if you find a main place of income and it's significant, you're done. Finished. It's always income source. But when you don't, the IRS uses this three-pronged test. And one of them is, do you have any income at home? Number two, do you have the substantial expenses maintaining your main area of lodging, your main home, that are duplicated when you're away? And number three, have you abandoned that area of income? Do you frequently use the home for your lodging, or have a family member and not the parent, spouse, kids, lineal, and further downstream living in this place? And spouse would also include the more contemporary definition of registered domestic partners, or a significant other that you have an established relationship with. But what you have to do with those three tests, you got to meet it. If you meet all three of them, you're fine. If you meet two of them, you're still okay, but the IRS would scrutinize it a little bit more.
Okay.
If you only meet one of them or none of them, then you're itinerant,
and
we're back to having everything taxed.
Yeah. And so for the listeners, itinerant is usually a new term for those unfamiliar with these talks, but itinerant is a person traveling that doesn't get tax reimbursements, or
the tax court has an interesting label. They call them a tax turtle.
Tax turtle?
Yeah, go to my blog and scroll down that case where the court said that this person was a tax turtle.
I think I have read that blog. I thought that was you coming up with it. I guess I misread it.
No. Because in previous court cases, they say, well, you carry your tax home on your back. So that recent decision, they just called them a tax turtle. They carry their shell on their back.
Oh, goodness.
Tax court cases can be really hilarious. Find the right one, and it's a good writer.
That's funny. When talking about taxes and the kind of the tax-free money that us as travelers would accrue, what is the correct term for that? Is it reimbursements? Is it is there certain categories?
From the IRS perspective, they are reimbursements.
Okay.
Whether they come in the form of a per diem, stipend, allowance, subsidy, tax-free payments, tax-free compensation, living out allowance, sustenance allowance. Those multiple terms can be a little confusing. And per diems are only lodging meals. There's no per diem. That's getting into further detail. But you treat lodging and meals when it comes to supporting that or payment differently than you would mileage and scrubs.
Got it.
to use.
Okay. And something that you mentioned earlier is kind of traveling away from that address that we're having as a tax home or our permanent address. And one of the things that I first saw you speak about and get very passionate about was something called the 50-mile rule, or the not 50-mile rule. Could you talk about that?
Well, if you go to my blog, which is different from the website, the blog gives me an opportunity to rant. So if you go to the very, very first post, I compared the 50-mile myth to me playing whack-a-mole. You take that little hammer and a little mole pops up and you hit it. It's just endless. A lot of agencies, unfortunately, and there's a rationale behind it, will use this 50-mile rule. If you're 50 miles away from home, you get lodging reimbursements. That's really the down and dirty of it. Mm-hmm. But that is actually sort of half-done compliance. Because what is a lodging reimbursement for? Lodging expenses. Mm-hmm. If you don't have lodging expenses, why should you get a lodging reimbursement? That's the more positive, the more solid logic with that. Mm-hmm. But the agency has to have some due diligence. And it's great to use a 50-mile rule as a disqualifier, not a qualifier. Mm-hmm. And 50 miles only tells you one thing. You drove 50 miles. It doesn't tell you you had expenses. But it's somewhat of a shortcut to compliance that creates a lot of confusion, especially if it's a new recruiter. And recruiters, I mean, they really have a hard job sometimes. You come on into this industry, you have no idea about. Imagine when we hire people, we have to orientate them to healthcare staffing. And that's a world unto itself. So you get a recruiter and may have been right out of college, human resources. All of a sudden they got to talk about tax. Mm-hmm. So they're going to take a shortcut initially because they don't know where else to go.
Right.
But yeah, there is no such thing as a 50-mile rule for lodging and meals. Mm-hmm. There are 50-mile rules elsewhere, but not for what we're talking about.
Uh-huh. Absolutely. Yeah, I imagine though, wherever that may have started, whichever company, whichever multiple companies, it must have been in a very populated area, because being from Missouri, people travel to work 80 miles, 100 miles every day.
Yeah.
They
same here in Nebraska.
They cut wood, they load it all on a trailer, head up to St. Louis, sell it, come back same day. They're construction workers, same story.
And they know the cows about a little air tags.
Yeah. Absolutely. So, the 50-mile myth is definitely a myth. But it was interesting. You mentioned it was more of a disqualifier than qualifier. And it reminded me of like special testing that we do for patients, where you're trying to rule out a disease. So if you are within 50 miles from your tax home, then you for sure are ruled out. You're not a traveler. But just because you're beyond that 50 miles doesn't mean you're necessarily ruled in either. So it seems like it'd be a very sensitive test.
And, there are occasions where you may be 35 miles away, but you are in the center of Los Angeles, and there is just a special circumstance to where you've got to have a second place of lodging. I've seen that. Mm-hmm. I cringe when I see it. But the 50-mile concept has this idea, well, if it's less than 50 miles, you ought to be able to commute. Mm-hmm. And living in D.C. for 10 years, big deal. My wife did 45 miles. My neighbor did 52 miles. And living in Nebraska, when I worked at the hospital, people would drive 80 miles. Big deal. Because you can go 70 miles an hour.
Right. For all like 75 miles of that 80 miles. Yeah. Legally 70 miles an hour. You mentioned earlier the recruiters and the ones new to the game, and they're kind of being thrown in the situation where they don't really know the taxes. They don't know about your blog. They don't know where to go to get this information. And something professionally that I'm very aware of is trying to stay within my own scope, whether that be my physical therapist scope and not trying to be a medical physician, or trying to be a nurse or a radiologist or a sonographer. We all have our own scope. What is the line that you kind of draw for somebody trying to inform somebody about tax laws and how to be aware of them and what they are, and to crossing that boundary into where they're giving professional advice?
From a recruiter's perspective, you mean?
Yeah, we can use that scenario for this.
Well, one of the things we also do is we do recruiter training. I will review documents with agencies regarding their reimbursement per diem practices, and once we get those up to date, I'll fly out to the office and hold one-day training sessions, and I have a number of agencies. I just do it every year. It's part of their in-service routine. And that is exactly something I address. The recruiter, if they're really good, wants to be helpful. And it's a joke, but at the same time, it's real. Some recruiters have to learn how to fix alternators, dishwashers, because you get this traveler that has never been to St. Louis, doesn't know a soul, and all of a sudden their alternator breaks down and they don't know who to go to. So a savvy recruiter finds some way to help them. That's just the recruiters become a little parent all of a sudden. So it's frustrating a recruiter. They want to know what they're talking about, give a good advice and help. But yeah, you cross that line sometimes, and we leave the recruiters we train with this little flow sheet. And the most important part of the flow sheet is contact your tax professional. If you don't know, don't claim to know it. Don't try. Send them where they really need to go. They need to be talking about this stuff anyway before they invest their lives in a false promise of $30,000 tax-free in reimbursements. That can come back to haunt them.
Absolutely. We recently had a big tax law reform. Was this a big deal for travelers, or what kind of happened with that?
Yes and no. It all depends on what your routine is. There is a link on our website to an 8-page analysis. If you're insomniac, just read one page for the next 8 nights, and you'll save yourself 8 pills, whatever, to get to sleep. But I would say from a high-level view, about 30% of travelers are not faring well from this. Another 20% break even, and another 50% make out like bandits. The biggest change is the fact that employee business expenses are no longer allowed.
Okay.
Now, we got to also talk about a side thing that has opened up, and that is the independent contracting side. Because now independent contractors still have job expenses, but once they get to their net income, they are now only taxed on 80% of their net. So we can address that downstream and stick with the first part. But with the job expenses being gone, there are 3 types of travelers that don't fare well. The first one is the one that's working these seasonal assignments that the hospitals have. They have their own float or their own seasonal pool. Typically in Arizona, California, and Florida, the snowbird facilities. Because these hospitals do not give tax-free reimbursements. They will provide housing but add the value to your wages. They will give you travel but add it to your wages. Everything is taxable. So those expenses that you have for there that's reflected by that increase in income are usually deductible. Now you can't do that. And in one assignment, and it's broken out on those articles, one assignment you could lose $6,000 of deductions.
Okay.
The second type that's most affected is the crisis shift. The typical model for a crisis shift is we will provide the housing, but no meal allowance.
Mm-hmm.
It will get you there because you need to be there yesterday.
Yeah.
Because it's a crisis shift. In the past, you take that assignment, you write off your meals. Now you can't do that. In one assignment, that would be $3,000 to $4,000 of deductions lost.
Mm-hmm.
And then the final person that doesn't benefit as much is the traveler with a mortgage. In the past, they already had a baseline to itemize, and their business job expenses were just icing on the cake. Now they're gone.
Got it.
Those are the three that stand to lose the most. But it also throws another monkey wrench into this. If I'm driving 2,000 miles across country and my agency gives me $300 for travel, in the past I could deduct that.
Mm-hmm.
Now I can't. So what's going to give? The usual response if you ask for more travel pay will be the recruiter moving some from housing over to travel. Perceptionally, you got more travel, but you lost out on housing. And if you added up your meals, lodging, and travel, you would have X dollars. But then if it's just reshuffled around, you're still going to have X dollars.
Mm-hmm.
So if you're going to try to negotiate more travel pay, get your numbers first, then ask for a little more, but don't be unreasonable. Aim for some $200, $300, whatever you can squeeze out of it. The agencies will probably adjust downstream their reimbursements to probably do more on the travel pay to balance it out, because the perception is, okay, I'm being taken care of, versus the perception of, well, I've got to drive all this distance and I get nothing for it.
Yeah. So as a typical traveler working as a W-2 employee or someone using a staffing agency, anything that isn't covered within my per diems and lodging and travel reimbursement, basically anything that doesn't show up on that check to me, I can no longer write off as I would have before.
And also your scrubs, your uniforms, your CEUs, your equipment that some people buy, your reference manuals, all of that, it's gone. Now, I will say that there is a Senate bill that was introduced by 5 senators that seeks to restore that, and not just restore it, but stick it in the first page of the tax return, which would be an extremely valuable deduction for everybody. And in my annual visits to Washington with our National Tax Association, that's actually something we advocated for many years. But I will tell you that tax law is a lot like a teenager's best bedroom. You send your kid downstairs or wherever their bedroom is and have them clean it. 4 hours later, it's messy. So the tax reform has cleaned the bedroom. Just like any teenager, it's going to get messy again. All we got to do is have another election or somebody getting a whim of adding something, adding a vote or two, you know. So the beat goes on.
And going back to something you said before of, and I think this is really important for the listeners to understand, the nomads, the travelers, when you are getting those reimbursements, say before you were only getting lodging and meals, now all of a sudden they're adding in the scrub reimbursement, they're adding in the travel reimbursement, that CEU course that you took. That's all coming from the same bucket, like Joseph explained. And it doesn't matter how many cups you pour that bucket into, if it's 2 or 8, you're going to end up with the same amount of money. So although when you get those reimbursements, it's very important to add it all up, calculate that blended rate. That way you can compare them. And most of the time it just looks a little bit more lucrative than it actually is. So if you're looking at your bill coming in or your check coming in, there's 6 different items listed on it, you're like, oh yeah, I'm really winning on this contract. But you add them all up, and really it would have been the same that you were earning before at your for your per diems and your meals and incidentals.
Yeah, it's like somebody going fishing. They come home with 5 buckets of fish, and there's only one fish in each bucket. It looks as if they caught 5 buckets of fish, but you can still put those 5 fish in one bucket, and it's still the same number of fish.
Absolutely. So Joseph, one of the questions I get asked a lot, and I think this is very specific to physical therapists, occupational therapists, those who have the opportunity to travel straight out of college or out of a university. If I am going to a university away from my parents' home, I've been working at the university, I haven't been making that much money, I'm anticipating that my first travel job is going to be the most income that I've received ever. How, in that situation, would that affect my tax home?
Well, traditionally, when you go to school, you don't change your residency, but that's the old way. Oftentimes, especially when it's grad school, therapy level professionals are beyond the undergrad, and the individuals will actually move to that locality, especially if they get in-state tuition rates. So you have established a tax residence. One of the 3 tests that you discussed, you can't abandon a tax home unless you have a business purpose for doing that. So the common scenario is you have somebody who, let's just take the RN because it's more an easier way to understand it. They graduate, they take a job at home within the area of their college. They've been working there 2 years. They got enough experience now. They want to travel, and they don't want to keep that apartment there where they have been for 2 years. So they move in with their parents 700 miles away and say, "Hey, I got a tax home." That's not the case per se, because the only reason they moved in with the parents was to facilitate a personal choice. You don't see a business reason for that. It's not like the job sent them there, or they had a spouse or dependent or significant other that they were following. It's a personal choice. And in most audits, when you have that kind of scenario, the auditor is immediately going to assume that all of this is a lifestyle choice. There is no business necessity for all of this activity. So we usually will suggest that clients, if they can, to ward off that possibility, try to get some income in that new area that they're claiming as their home. So it not only registers on the permanent residency side, it also registers on the income side, because after all, tax home is about money. It's not about where your heart is or where you intend to be. That is the safest. Does it collapse it if you can't do it? No, but it does raise a risk element here, because we have a choice of where to go. I think I had a client once that lived in Philadelphia, moved to St. Louis to work in Richmond, Virginia. Now, the reasonable person would say, why don't you take the train to Richmond and just move outside of Philadelphia into the county? But the illustration suffices. There was no purpose for St. Louis from a tax home perspective. That was just a personal choice.
Got it.
So that's the best scenario. But oftentimes you don't have it. You can't. But just being aware that that's a risk factor is good.
Got it. Joseph, do you have a favorite travel story, or maybe even a favorite tax story? I don't know how many tax stories there are, but anything interesting or one that you like to tell?
You mean during my travel days?
Yes.
Well, I grew up in South Carolina, and my very first assignment was northern Minnesota from August to January. Now, I was warned by you know the old ballad of Jed Clampett from Beverly Hills. The kinfolk said, "Hey, move away from there. California's the place you ought to be." Well, I had to reverse. Why in the world would you go to such a cold, lonely place? That was my favorite assignment. Here I am, newly married, and I go to the tundra. I actually walked to work. It was only 3/4 of a mile.
Uh-huh.
And occasionally I walked across a frozen lake. Now, for a South Carolinian, this is a genuine miracle. You don't do that in South Carolina. And I went one day on a Saturday, I went out in the middle of the lake. I was jumping up and down just to see if it was real. These people were looking at me on the shore like, what's this idiot, you know? But I went ice fishing and all the rest of it. But yeah, I walked across a frozen lake to get to work. I love that place.
That's awesome. So you didn't decide to move there when you made the big move?
Well, that's why we wound up going to Nebraska. Many years later, we wanted a manageable kind of lifestyle. Eventually, when we adopted our kids, that was the whole point of it. We knew we couldn't have our own biological children, and we were going to adopt. And that's another long story of how we wound up here. But that first assignment was like, okay, this is what we want in the future. Which, for a lot of people, that's what traveling does. You find out where you really want to go and where you really want to stay. That's the beauty of it. Which, my advice to most travelers, get out and see this country. Don't orbit one place. And somebody's going to hit me for saying this, but the millennial generation tends to go in herds. They will fill their passports doing all sorts of save-the-earth activity in groups. But you stick them in a car and tell them to drive 1,000 miles by themselves, and there's instant panic. That is the most wonderful time and way to explore this place. Just go, travel, ignore the herd. Go where the herd does not go.
I was having a conversation about that last night, about how you can travel with someone else and you can travel by yourself, and you're going to have different experiences doing that. Ultimately, you'll see the same stuff. You'll still do the same things, probably, maybe not, depending on how much heavy baggage the other person is when it comes to hiking early on Sundays. But it will be a different experience if you do it by yourself versus with a friend or friends. Absolutely. Joseph, did you have anything else that you wanted to tell the travelers?
Well, we had that little thing we touched on in the independent contracting, and that's a long thing, but that is a game changer. When Congress passed that part, unfortunately, we get a lot of mixed messages. Wasn't just for the corporations. It wasn't just for the uber rich. The Uber driver, the painter, the contractor, the construction worker, a lot of non-nursing professions have opportunities to work as independent contractors, especially physical therapists. But under those new rules, let's say you made $20,000 net and you were self-employed, you only get taxed on $16,000 of it. You write off 20% before you compute it. And there's a lot more interest in that. It does still have a lot of hurdles, but it is a game changer in tax in general, because self-employed individuals usually had to double up on the FICA Social Security tax. Well, they still do, but now they have such a drop in the income tax side that it's making it more appealing now.
Got it. Something that I've had a discussion in, and maybe you can clarify. I know that the rules, at least for a medical professional trying to be a independent contractor, are somewhat gray. If a physical therapist, if a nurse would actually become an independent contractor, do they fit the definition of being an independent contractor?
Well, probably the best way to look at it is that the self-employed individual has a lot of autonomy in not only what they do, but how they do it. It's a lot harder for an RN to be a contractor, self-employed, than it is for a physical therapist.
Okay.
Because they're told where to work, they're told when to work. Here's your drugs, here's your patient. You're being told exactly what to do, versus a lot of physical therapists are just told what they need to accomplish. And they set out on their own to figure out how they're going to accomplish that, usually in their own time. So there's a lot of measurements of how much autonomy you have or what you do before you can be classified as one. Sometimes it requires you to get an LLC so you can have sort of a second layer there. And there's a few agencies that actually do it or set you up with those kind of arrangements, but you can't just ask any agency to do that. Because there is a lot of compliance involved in that, and you got to be willing to take that risk from an agency perspective. Got it.
Hopefully a conversation I can bring on the podcast here in the near future, because there is a lot
and
of
if you come
interest.
to the Travelers Conference, I'm doing a whole session on
Oh, fantastic. Okay. All right. Well, listeners, if you're not signed up for TravCon and you want to become an independent contractor, you should get there and watch Joseph Smith give a speech on it.
There you go.
Well, Joseph, if the listeners had any questions for you and they wanted to reach out, I'm imagining that somebody might be listening to this and realizing that, oh, I don't have this. I don't have this tax home. I don't have this set up. I'm at risk. How can they contact you?
If you go to our website, TravelTax.com, there's a link for that. Info@TravelTax.com is where our general questions come in, because we take turn. Anybody on the staff can answer that. You can call the office as well. Just don't call on Mondays, please. Mondays are always a bear, even when the office. I call it the day of reckoning. All these great plans for the weekends, you didn't do them all, and then you wake up on Monday morning and realize you're a failure. But you can call, you can email. Do look over our FAQs. My wife puts our website together, and it's a compilation of years of questions that we get, and you may find the answer there before you even need to call. But we don't charge to chat, as we call it, for general information like that, because education, we believe, is the best approach to this kind of world.
Absolutely.
Because if they're not even a client, and we've now made this industry more compliant, we've done a lot of our mission already.
Yeah. That's amazing. Yeah. Thank you so much, Joseph, for being on the show, for providing this education for us and for the Nomads. But Nomads, if you're looking for the next episode of the New Medical Nomads podcast, you can find the official launches on newmedicalnomads.com. If you want the early access, you can subscribe on iTunes, Spotify, YouTube, any of your favorite podcasting apps. And then the more engagement these get, the more shares, the more likes, the more hearts. Show us some love. The more people that will see it, and the more people that we can help, which is ultimately the goal of the show. But Joseph, thank you so much again, and looking forward to seeing you at TravCon and Travelers.
4 or 5 more weeks. Yep.
And everyone have safe travels.